Hello everyone, Joe Vitale here at Vitale Wealth Management with this week's Gradient Investment Weekly Market Update. All information is gathered as of the week for November 17th, 2025. Let's talk about the week in review. Major U.S. indexes ended the week mixed with the NASDAQ down 0.43% amid continued uncertainties around AI and the interest rate outlook, while the S&P was up 0.12% and the Dow was up 0.41%. International developed markets were up 1.66%, while the emerging markets were up 0.31%. U.S. Treasury yields moved slightly higher, pressuring bond prices. The U.S. aggregate bond index declined 0.24% for the week. Now, Bitcoin extended its recent slide and officially entered a bear market, falling more than 20% from its peak and trading near 95,000 on Friday afternoon. We've seen a lot of things pulling back a little bit right now. Upcoming economic release. It's a busy week for economic releases. Today, we're going to see the export-import prices for the industrial production and capacity utilization report is scheduled alongside the housing market index, offering a read on the U.S. market sentiment. We need to see what's happening in the housing. The housing starts follow on Wednesday, which will be tomorrow, along with the Fed's October meeting minutes, which will provide additional insight into policymakers' thinking. Now, on Thursday, November 20th, the delayed September jobs and unemployment report will finally offer clarity on labor market conditions in early fall, while existing home sales give another view in housing activity. The week wraps on Friday this week with the Consumer Sentiment Index, a key gauge of consumer confidence heading into the holiday season. Releases of pending and backlogged government-issued economic reports may be subject to further delays and potential cancellations owing to the U.S. government shutdown that began October 1st and ended on November 13th. One of the longest shutdowns we've seen, but really all those reports, they're always changing them. Half of them aren't accurate to begin with, but we got to see what's happening. Market outlook. The longest U.S. government shutdown in history ended last week after 43 days with a funding bill extending operations through January 30th of next year. And federal employees will receive back pay, and essential programs like SNAP are restored. Similar to past shutdowns, stock and markets took it in stride, with the S&P gaining 2.4% during the closure. Economically, the shutdown is expected to slow up amid contraction in Q20 in the fourth quarter. GDP, although most of the impact is seen as delayed rather than lost, and growth estimates for the first quarter next year have now been revised higher. With the government reopening, the flow of withheld economic data should gradually resume, though timing remains uncertain due to earlier collection challenges. Now, the September jobs and unemployment report is scheduled for release this Thursday, offering a key read on whether labor market softening continued into early fall. Meanwhile, expectations for a December rate cut have eased. Markets now price in a 46% chance of a 25% rate cut, of a 25-point rate cut, down from more than 70% a week earlier. Let's talk about any changes in our gradient portfolio. They rebalance every quarter, or if we see fit. And there have been no changes in the last week. Talk about some of the stocks in the news. Sumitomo, which is owned in the G40I. It's a Japanese bank owned, and earnings beat last week, raised guidance. The company also increased its forecast, announced shares of buyback program. Shares were up 6.13% for the week. Also, Cisco, which is owned in the G50, delivered better than expected earnings and issued guidance ahead of estimates, making its fourth consecutive quarter of revenue growth. Shares were up 8.2% for the week. Also, we're seeing a little bit of a pullback this week. We have a couple days of down markets, a lot of mixed markets. And of course, Bitcoin is down, so things are falling down a little bit. We've had that shutdown. They said, it's 45 days. It's, a lot of things are falling back a little bit, but we're pretty confident it's going to rebound pretty quickly. We don't see a lot of indicators to support otherwise. But that's it for this week. Thank you so much for being part of the Vitale Wealth family. If you need to get a hold of us, 855-756-5700. Visit us at vitalewealth.com. Hopefully I see you next week right before Thanksgiving. But that's it for this week. God bless you. We'll see you again.